Hi, good morning everyone. Welcome to the BidAsk YouTube channel. This is your host Sonali signing in. Finally, we are all back from a long weekend. Let's take a quick look on what really happened on Friday. Friday, we only had one piece of important data, and that was the US non-farm payroll data. The data came in much stronger than expected. The headline numbers were interesting. The unemployment rate fell. But still, we did not see a massive rally in dollars because the last 2 months data was revised downwards. So market somewhere doesn't seem to be getting convinced that the situation on the ground is exactly what is being depicted by the data. So while the positive number did initiate a bit of a rally in the initial few minutes of the data, but as the day progressed, we saw selling coming through in dollar index, and both euro and pound rallied to higher levels. Dollar index is trading 101.18 odd areas. Critical to see whether it breaks 101 or not. It's been getting supported in this zone for quite some time, and in my view, a rally to 101.60, 101.70 is not ruled out. In this rundown, it's not looking very likely that 101 will get broken. Wednesday, we have a crucial piece of data from US again, which is the US inflation data. Unlikely to see a very sharp move lower on the inflation front, and perhaps can drive I won't say a rally per se, but yes, an uptick to 101.60, 70 or even 101.80 areas I will not rule out. Coming to dollar rupee, I think the pair has got completely stuck between a 20 paisa band. It's not breaking 81.65 on the lower side. On the upside, 81.85, 81.90 seems to be holding well. Market is mostly looking to play the intraday, long and the short trades with very tight stop losses and an entry and exit between 8 to 10 paisa. Unless the authorities allow the pair to break lower, I think there is a push which is coming from the custodial banks, the foreign banks, and some bit of exporter selling, just looking to drive the pair down to the next support to 81.40, but it hasn't been allowed by the authorities to break lower in this rundown. While this area is becoming sticky, and I think for the next 2 to 3 days, market would like to test a little bit more if the lower side is being allowed to break. If not, I think with dollar index kind of having a channel move towards 101.60, 70 areas, I would roll out dollar rupee moving back to an 81.90 or even 82 levels. I'd probably look to go short there, but important is what will really drive the move to those levels. If there is a massive risk off, then perhaps one may want to wait for a move to 82.25, which also is not ruled out in the market given that the downside is looking sticky. But if 82 happens in a short squeeze with global markets staying in a more status quo mode, I'll be tempted to go short on dollar rupee around those areas. On the very immediate basis, I think 81.65 is a buy zone with maybe a stop of 57, or instead of taking a stop, I think given the low walls in the market, protecting the buy side with a bought put option is not a bad idea as well. So 81.65 one can go long, and around the same level for an 81.50 put, taking a risk of 15 paisa, I think is worth a try, at least on this weekly expiry. Yeah, I think that's it for the day. Anything big, you will hear back from me. This is your host Sonali signing off. Have a very great day. Thank you.